Hey everybody, good morning. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We have a lot to discuss today, right? We got jobless claims out this morning. They were higher than expected, but at the same time, Philly Fed came in stronger than expected. So some mixed guidance on economic data. But the big story of the morning is Taiwan Semiconductor coming out with better than expected results, raising guidance, and likely saving the markets from another epic down day. Yesterday, the NASDAQ down 3% on the day. It was over a year since that has happened. In fact, I think you have to go back to December of 2022, so a full year and a half since we've had that type of down move in the NASDAQ. Big cap tech, major corrections. Small caps, mid caps did okay. Bank stocks did well. We're going to see what happens today. Now, going into the charts, we're going to look at Taiwan Semi. We're going to look at Domino's Pizza, which is getting crushed on earnings. But let's start out with the S&P 500. All right, so this is the pre-market data here on the S&P. Up here, we have the economic news already for us. So initial claims actual was 243,000, which is the high end of the range that we've seen lately, versus 229,000 expected. Now, for those of you that don't know, jobless claims, that's how many people are filing for unemployment. So the higher the number, the worse it is. Now, that's opposite for Philly Fed. Philly Fed Manufacturing Index is a manufacturing indicator. And again, it came in at 13.9. It was expected to be 2.7. So better news from the manufacturing sector this morning. And again, that's probably calming down and negating the jobless claims numbers. Now, again, just taking a look here, right? Let's go right into here. What we can see is yesterday we had this big drop. We closed near the lows of the day on the S&P. We then overnight have been floating up. We had a little bit of a dip right here, but then we floated right back towards those highs. Now, this is something you have to keep in mind. Today is a day that is very important. Now, right off the bat, it looks like it's going to be a neutral to positive day. But the question is how much positive. Now, I want to show you something. We're going to do a little teaching here. When you get a big candle to the downside, right? So here's a candle. All right, and again, just bear with my poor drawing abilities. But what happens when you get one of these major moves to the downside, the next few days, including the very next day, is important because what you're looking for is how much resilience, how much buying comes back in. Like if you were to get a move right back up where we closed down here, but the next day we closed up here, that would be bullish, right? It would negate that entire down move, and that would tell you there's a lot of buyers in the market that were scooping up that dip. However, if we get a small little candle like this, where it's only up a little bit, that would be very concerning. It's showing you that after such a big dip in the markets, you're only getting a small buying pressure to come back in, and that's on the back of Taiwan Semiconductor raising their guidance, talking very positively about the AI chip demand. So again, this is one of the things I'm watching today as a technician to see how much of a rebound we see. The smaller the rebound, the worse it is going forward, and we likely would have more downside. A big reversal, then again, you could say, okay, markets are probably safe here going into the Netflix earnings tonight, and then some of the data over the next couple weeks. Okay, so that's one of the things that we're watching here very closely. I do want to just point out that the NASDAQ 100 is higher this morning, but yesterday we dropped 15 points on the QQQ, which is the NASDAQ 100 ETF. We're only up about 3 and change right now, and so that's kind of what I'm talking about. If that's the extent of the bounce we get today on good earnings from Taiwan Semi, that would be bearish to me. If we can somehow have a day where we negate at least 50% of the downside from yesterday, that would be very impressive and important. Okay. Into a couple other charts. I haven't gone over the dollar chart with you guys in a few days, so I do want to just take a minute and look at this chart. Very clearly, we were trading in a range, right? We started on this breakout retrace, then we started to establish ourselves within this pattern. But look at what's happened. We have now broken out to the downside right here, below that trend line. Now, it's unconfirmed, meaning you haven't confirmed, so it's still kind of a wishy-washy breakdown. It's what I would call a minor breakdown versus a major breakdown, but still, we have to be aware that it looks like the dollar could be on the verge of a bigger move to the downside. This lower level where these two trend lines would converge, if we extend them out like that, that would be your downside target. And again, honestly, at this point, that's basically what I'm expecting. I continue to expect more economic news to come in weaker generally, and that's going to push the Fed to cut. We know the Fed is basically about 99% chance of a cut in September at this point, which is not that far away. All right, so that's what we have here on the chart of the U.S. dollar. I do want to flip over to the 10-year yield. The 10-year yield, I continue to be long the TLT with members of smart money stocks and ETFs. The thought process here, again, is that same thing. If the economy is going to weaken, rates will come down. And what we can see here, and by the way, when rates go down, the TLT goes up, just for those of you that don't know that at home. So that's why, if you think rates are going down, the TLT is a place to be. Now, we're already up, honestly, I think 7 or 8% on that trade. I probably won't look for too much more out of it, and I want to explain why. So I do think rates are going to go lower. You can see we're kind of hammering on this. Looks like we might break down. But I also think that there's a limit. We're not going back, in my opinion, to 2% interest rates. I think you're probably going to get down to 3%, maybe just under 3%. And even if we enter a recession, I doubt interest rates will go that low because of the inflationary implications. So what we're seeing very clearly is that as the economy slows, we're not seeing inflation really dive back to 2%. I think there's this new medium of inflation, probably between 2 and 3% in a recession. And so if the Fed really drops interest rates and the government keeps spending money, it's going to kickstart the next wave of inflation. And my biggest fear here is that we're going to be in something like this, right? So like this. And this is what happened in the 70s, by the way. You basically had a scenario where we had inflation, the Fed did their thing, inflation fell, but it didn't fall that much, and then they started to print again and they lowered interest rates, which caused the next wave to be even bigger of inflation. And then again, it caused a recession or a dip down here, inflation came back in, and the next one. And that's my biggest fear here, is that we're in this new cycle, which is going to be taking us into these dips where inflation does come back in close to 2%, but it's not going to get back to the levels we saw prior, and the next wave will be even higher and so on and so forth. And by the way, just another reason to own some gold, maybe own some Bitcoin, all of those nice little potential security assets. All right, let's take a look at Taiwan Semi this morning. Here, let's go to our pre-market data. What we can see on Taiwan Semi here, initially the stock got crushed yesterday, closed down here. In the after hour, it was trading down, then it started to float up. This is when earnings, well, when markets started trading here at 4 in the morning, earnings had already come out. The stock opened here, then actually saw a pretty big dip to the point it went negative. This was this morning. I was watching that and I was like, oh my goodness, with good earnings, if this thing goes negative, that is really bad for the markets. But then we saw buyers reemerge and we're now floating back up. So the stock is back nicely higher. And that's, again, lifting the S&P, lifting the NASDAQ off of its lows. We saw crazy drops yesterday. AMD down 10%, NVIDIA down something like 7%. I mean, these are big drops when you have the magnificent 6 or 7 dropping $500 billion yesterday. I think in 5 days, it's $1.1 trillion lost or evaporated. Those are some serious numbers. And by the way, those type of numbers can have an influence on consumer spending. If we see more of this type of selling, what's going to happen is the high-end consumer that's still feeling okay because the stock market keeps going up, all of a sudden they're going to start to see their 401k balances go down. They're going to see their investment accounts balances go down, and they're going to say, wait a minute, maybe I can't go and spend all this money that I've been spending that's been keeping the economy going. It could trigger a recession, right? All right, so Taiwan Semi's doing its thing. There's not a big enough move here for me to trade as a trader. So I just look at that and I say, okay, that's a positive. I'm going to watch this today as my barometer for the overall market because, again, I do think it's the most important. And then obviously I'll keep an eye on Netflix a little bit later. Now, another stock, and this one's a little on the thinner side, but take a look at this drop on Domino's Pizza. So this was a trade. I had a short on this in smart money stocks and ETFs. We were short from $535.50. I just covered today at $416.20. Amazing fall. And by the way, it's even lower now, but we banked 22% on this short. Incredible drop. But the key is this, is that number one, the stock's getting crushed because they said that consumer demand is faltering. And we're also seeing other scenarios here where we're looking at, basically all of these fast casual restaurants are suffering, which is, by the way, there's other fast casual like Chipotle. I mean, how many times have I come on and said this is insane on Chipotle? It's been one of my theses for what's insane about the market is that you had a fast casual restaurant while Boston Market was filing for bankruptcy, Red Lobster's borderline. I mean, all of these other names are seeing major hardships, yet Chipotle was going up. Then Chipotle announced a stock split and everyone bought it, and then the stock on Chipotle has gotten crushed. Speaking of which, let's flip over to that real quick. We'll come back to DPZ in 1 second, but I do want to show this because it's an important lesson. All right, so look at this chart on Chipotle. All right, so Chipotle, and by the way, I like Chipotle. I go there, but my point is there's no reason why this should have gotten this extended to the upside. And by the way, look at the channel, perfect channel. Look at what happens. The stock splits. And by the way, when it announced the split, it pushed the stock up even more, even though literally nothing changes on a fundamental basis with the company. There's no valuation change. It is nothing there. So it gets investors excited because instead of 1 share, you get 10 shares or whatever it is, but they're just at 1/10 of the price. Again, nothing changes. But the idea here is look at what happened right there. Once the channel broke, Chipotle is now down over 20% in just this amount of time. And that's about 3 weeks. And that can happen. And so you look at something like a Domino's, which had that same general chart. In fact, let's flip back to Domino's, DPZ right now. And that type of thing is literally playing out to a T. Look at this. Does this look almost identical to the Chipotle chart? It does. Channel to the upside. Again, my channels, you guys know I love my channels because they actually work. It's one of the few things that works in trading. These type of simple technical analysis tools really work. But look at once it broke, it came down, and then you know where it's trading right now? All the way down here. It's a big drop, big drop. And again, it's just that people are struggling, especially the consumers that would go to a Chipotle, would go to a Boston Market, would go to a Domino's and get these type of things. These are the types of people that are now being forced to buy at the supermarket because they can get it a little cheaper and make it themselves. And again, this is going to hurt stocks like this, and it is crushing this stock. Now, going to this stock, where is technical support? So what we have to do, and number one, this is a very thin stock. So be aware of that. It's very, very volatile. But what I start to do is I start to look and I say, okay, where are my gaps? Here's a gap. Where are my pivot points? I'm going to turn over here and just take a look. And really what I'm seeing here is if we zoom out on this, this is your zone right in here. By the way, we're trading at 405 right now. So you have to at least go down to 400. And it looks like there's a major level here just around the 400 even number. Now again, insanely volatile. But around 397, to me, this would be somewhat interesting. There we go. Pops right in there. All right, so see what I'm seeing here? See this area right here, this pivot top here, right through this low, right through this low. That could be a level of support. But just keep in mind, because this stock is so thin, it could pierce by $20. That wouldn't shock me one bit. And you really want to have your secondary levels in play. Secondary level would be right around looks like 375 maybe. And then also this pivot low down here around 340. Incredible. Okay, so big moves, and this is why I love earnings season, folks. When I come on these game plans, I can guide you guys to where levels are, teach the technical analysis, and there's just so much action. And we're just at the start of earnings season. We got bank stocks. Now we're starting to get into technology. We have Netflix after the bell. Speaking of Netflix after the bell, let's take a look at that real quick here, and we'll go into that. So if we look at Netflix here, I had this marked off perfectly, by the way. You can see I annotated this chart already here. Basically, I was saying it was a short here at this 700 level right here because it was a classic double top, and then you had this trend line, all these pivot points all along here, and we tagged it right there. And so that was a good short. It's already pulled back about $50, $55 from there. Now, going into earnings, this is tricky. All right, so earnings, number one, because it's pulled back over $50, it's already factoring in, maybe good earnings, but maybe not, it's still not, it's not like it has to knock it out of the park by as much because it's pulled back. But in the scheme of the chart, if you show me that chart and you ask me, do I want to swing trade long this or short this, I'd be short every time. Okay, now again, earnings, could it go up $50 on earnings? It certainly could, but where is it in a month from now, 6 months from now? I would say it's much, much lower. Now, maybe not down there in 6 months, but my point is there's lots of levels. There's a gap fill there, and the idea is this is a classic technical double top, classic trend line. Yes, it could break out, but probabilities favor over the next 1 to 3 to 6 months a pullback in the chart of Netflix. All right, so that's, again, pure technical analysis. I have no clue what it's going to do, but I'm just going with what the probabilities are showing me based on double top, based on trend line. That gives us probabilities to the downside, and we can go on from there. All right, one more chart I just want to show you guys, the SMH. Remember, the SMH was one of my favorites in terms of having a signal on it that I've never seen before in terms of how bearish it was. The reversal engulfing, essentially an M top, double top. You can see the drop that we got, and I kind of warned you guys about that ahead of time. Even before yesterday, we were talking about this and the inside bar bearish pattern right there, bear flag. But the question is, how low can this go? Well, it's going to have bounces because buy the dippers are going to be coming out of the woodwork as it goes down. That's the conditioning that the market does to get people to buy in when it dips. But where will it ultimately find major support? So there's going to be a major support right in here. That's right around the 240 level. That could be an interesting level for at least a technical bounce. But ultimately, how far could this go down if things play out? And a lot of people will think I'm crazy on this. But in the very least, I think 229 right here would be a very likely near-term target. And 229 to 230, you can see the 230 right there. Notice this flat top, this is what I call a shelf. So if you drop a ball from up here, right, here's your ball dropping, where is it going to bounce? The shelf, right? If the ball hits here, it bounces back up. Now, again, do I think the high could be in for a year or 2 years or 5 years? Yeah, I actually do. On the semis, that pattern is so rare that it could be a multi-year high, but you'll still get bounces before further downside in the charts. And again, a lot of people will disagree. That's what I'm used to. I'm used to that, obviously. People thinking that, no, it's going to new all-time highs. It'll go up to forever. It'll go up to infinity. You know, that's the normal type of thought process because the market conditions us with emotion to think that way. But once you start studying charts long enough, you know that there's a ratio between how fast something rises and how fast it will fall. Look at Tesla in 2021, dropped 75% after that unbelievably incredible run to the upside. Does it mean NVIDIA could potentially drop that? It's possible. We'll have to see. But again, our emotion will tell us, no, that's impossible. It can't do that. That's normal. All right. On that note, guys, I want to spin our wheel real quick here, get our wheel going so we can see who wins. Let's do that right now. It was TradingView, a one-year membership yesterday. So at TradingView, let's see what we have here. And we're going through all of these amazing comments and shares. Awesome. AJ Dawson, 1980, buddy. Congratulations. 1 year of TradingView. Reach out to support at Verified Investing, and we will get you hooked up with that. All right, before we get into the Bitcoin chart, I'm going to quickly jump over here, and we're going to just spin the wheel of appreciation. Here it goes. Let's see what we got. Oh, this is a cool one. $300 credit, guys. $300 credit. And I'll make you a deal. So you can even use this for the Winning Trader series that's already on sale. So again, I'll let my people know here. But if you do want the Winning Trader series, you can knock off another $300 on that one and purchase it with that additional discount. If you want to use it for one of the services, feel free. You can see what we have here. But again, we'll do that drawing tomorrow. Make sure you share this stream, the game plan, all over your social medias. That's really what we ask. And then just comment below where you shared it so that we can see and confirm that it was shared. And you got to be a follower. If you're not a follower but you share, you don't get to win. So make sure you do that. $300 up for grabs right there for our website here. All right, on that note, folks, we're going to take 30 seconds to just take a look at my commodities service, Smart Money Commodities, which continues to knock it out of the park. Here it is. Hey everybody, welcome to Smart Money Commodities and Miners. If it's a commodity, if it's a miner, I'm covering it in this service. I'm giving out exact entry and exit prices on these commodities and miners. And basically what you're gonna get is almost daily videos of information, technical analysis, data-driven. This isn't a service about hype. This is what is the data telling us to clear out all the nonsense from mainstream media, all the nonsense from social media. It gives you literally the data to use to make trading opportunities happen and profits ultimately happen. So welcome again, guys, to Smart Money Commodities and Miners. Come check us out here at Verified Investing. All right, guys, we are back. Right into the Bitcoin chart we go. Bitcoin's getting a little bit of a bounce here, nothing major, but we want to just continue to monitor what it's starting to do. So as a technician, how do I look at this chart? Well, number one, I see that it confirmed above this level. So this level now becomes major technical support. Now, just mind you, major technical support doesn't mean it's unbreakable. It means it's harder to break to the downside. So that's a good thing for the bulls. Now, what we're watching here is what happens. So far we've had a beautiful move up, and we're starting to go like this. If that continues, then you start to get a bull flag, and it insinuates more upside, very high probability-wise. So we're watching to see that. Now, on the other side is if we fell right down here, yes, you're into support and major support, and you might bounce off of it, but it kills the bull flag. And so every day, every time we get one of these candles, I'm always looking at it and saying, okay, I have a new piece of the puzzle. What is that telling me? Does it change my view from yesterday? And when I say change my view, it doesn't mean like, oh, do I feel it could do something else? It literally means, does the probability of the next move change at all? And the idea is, as a trader, when you study the Winning Trader series and you do all this stuff that I've kind of put out there for members here, is that once you get to a high level of probability and you kind of start to understand the factors and you say, okay, I've got 3 factors here, you start to understand that that means it's going to be like 75-80% success rate. And at that point, that's where you take the trade, right? If it's kind of 60%, 55%, it's maybe a half a factor, 1 factor, you kind of like pass. There's always a better trade at those levels. But once you get in that north of 70, 75% to 80%, really great probable opportunities. Okay, so that's what we're going to keep an eye on here, folks, on Bitcoin. Quickly going into gold, what we're seeing on gold is basically a small bounce day here as well. Bear with me as I flip over to that chart. We did hit this high level here. I talked about this yesterday. If you take this high to this high, it literally tagged it right there up there. Now, again, same thing as Bitcoin. What are we doing? So number one, this level has not confirmed yet, so it's not a confirmed breakout. So that means it's a little weaker than if it had confirmed. But you can still watch. Are we putting in a bull flag, or do we start to come down and then we get right back below that level because it is not a confirmed level? So these are all little things that my brain just continues to analyze. It's like a computer, right? It's just looking and data, and probability gets spit out because of that. All right, so on to silver we go real quick here. And silver is, again, lagging. You would say lagging in general. Down day yesterday, pause day, small update today. But it is getting close to this support area right here. So if it comes back in, and again, the question is this starting to be a little bullish for like that type of move? I don't know yet, but I am watching this area of support right around 29 now. If it flushes to 29, for me, I might nibble a little bit on a small position long silver. Right now, I'm not long silver. And again, that's just because I don't have the probabilities high enough per my analysis to get me long. But you come into a key level like that, and it would get me to those levels for at least a small starter position. Next up, if we go to oil, oil today, flattish to slightly lower. Yesterday had a little bit of a bounce. It pulled back. Nothing much going on here. I still think the probability is that you're going to break this line. This level is such a major resistance here. To me, it would be somewhat surprising if it breaks up. Doesn't mean it can't happen, mind you. Anything can happen. There's no certainties in trading, just like there's no certainties in life, maybe death and taxes. But aside from that, here we have a scenario where at some point I think we break here, and then the floodgates start to open on oil to the downside. And then lastly, natural gas, which I am long, and I added to yesterday on the big dip. Absolutely. This is why I start with small positions. We can see here, look at this. So again, we had a level that was just up here, then it flushed through. We came right into an exact level. There's a low pivot to exact low pivot to high pivot right through this area here. We went right into it, and we're starting to get a bounce. At this point, you're down 35% in a straight line on natural gas. And again, now I've got my average right in this vicinity. Now let's see if we can get some sort of retrace bounce. Yesterday I talked about this. You have the middle of the M. So there's a classic M pattern. And really, you're looking for something like a move back here. And then unfortunately, the M pattern, if it is an M pattern, the A, this is called the A pattern. Where does the A go? It actually goes lower down the line. I know a lot of us may not want to hear that, but again, I'm just telling you what the patterns do. And I just want to show you one more thing on natural gas. If we go back to, let's go to the weekly on natural gas. Look at this, all right? Look at the almost identical pattern when we were at the highs in 2022. Look, up, down, up, made a higher high just like natural gas did there. There's your little A, and then look at the drop. Now, again, it doesn't mean that has to happen, but pattern recognition is a key component of good traders and investors. You want to at least have a heads up that something is a possibility. There's so many investors out there that, like, they if they're long something, they just don't want to hear it. They're like, no, I don't even want to hear anything negative. I don't want to hear it. And I'm like, to me, I'm like, I don't get that. Like, I want to know all angles so that I can make my risk assessment. Like, what could happen if it goes against me? What could happen here? Which gets me to actually be smarter by buying smaller positions and dollar cost averaging versus just saying, nope, put my head in the sand, I'm long. I only want to hear bullish narratives. So I think we have to be honest with ourselves, right? Sometimes we make trades that don't go in the right direction. Do we maneuver? Do we stop out? What do we do? That's the important thing. It's really not so much how you handle your winners. Like, I mean, hey, we party. We have a great time when we have a winner. When we hit the exact low and it goes right up, awesome. But what happens when we have something that goes against us? How do you handle that? And that's important. And that's really what makes a trader or investor great versus the other traders, investors that generally lose money. All right, guys, on that note, I got to get to the Apex Live day trading room. I'm going to be trading these earnings this morning and this movement. Thank you so much for tuning in. I appreciate all the kind words you guys leave in the comments. Really do. Thank you for visiting us at Verified Investing, and I appreciate everything you guys do for us. Thank you so much. I'll see you tomorrow.